Citing what it described as demand and supply shocks from the coronavirus pandemic, Pricewaterhouse Coopers, Nigeria, has said that the country's inflation rate is likely to continue its upward trend for some time to come. The firm made a prediction in its latest Nigerian Economic Alert. Nigeria's inflation rate rose for a ninth consecutive month to hit 12.4% in May 2020. And several analysts have forecast that the upward trend will continue for the month of June. In its report entitled Demand and Supply Shocks from COVID-19 Keep Inflation Higher for Longer, PwC states that the continuous rise in headline inflation was partly caused by the supply shocks to the commodity prices and process and the fallout from the COVID-19 pandemic. These factors have kept the inflation rate above its long-term rate of 11.9%. On a month-on-month basis of its inflation outlook for H2 2020, the firm says, bearing a second wave of the pandemic, which could further threaten outlook for global economic growth, coupled with the absence of major shocks to food supply in Nigeria, inflation outlook for the rest of the year could be influenced by two factors. Firstly, the elevated base effect and the waning households' income. Partner and chief economist with Pricewaterhouse Coopers, Nigeria, Andrew Nevin, joins me now via Skype from Toronto in Canada for more on this discussion. Thank you very much, Andrew, for your time on the show.
Vitolo, it's always a pleasure to be here. Thank you.
Yeah, I want to start with the issue of inflation figure. It continues to stay high, on the high side at this time, and this obviously has become very worrisome. I can even say somehow scary. How does it come to you before we now break down deep into the report itself?
Well, when we talk about inflation from PwC, I mean, we always have to use the official inflation numbers put out by the Nigerian Bureau of Statistics. And as you can see in the report, and I think people know, they've been trending up. But at the end of the day, we think the situation is probably worse than stated from the official statistics, because what really matters in Nigeria is the level of food inflation, and even the official food inflation numbers are higher than the kind of total inflation numbers. And of course, I think more than half of Nigerians spend more than 60 or 70% of their income on food. So that is extremely worrisome for all of us in Nigeria.
Now, staying with the report from PwC, which you represent, demand and supply shocks from COVID-19 will keep these figures higher. With disruption in supply chain across board, where do you see Nigeria in few months? And of course, even the global economy is not really looking good.
No, I mean, we're in a very difficult situation. I mean, if you read the sort of COVID-19 as the way it's playing out around the world, I mean, there continues to be outbreaks in different countries. Australia's had, Hong Kong was reported this morning, places that we think where COVID-19 has subsided. It's a real issue. It's a real issue in South Africa. Of course, those who follow and understand what's happening in the United States. So, and it's had an economic impact. When you lock down billions of people, we've had the greatest economic calamity ever to face us. On that. And country after country are running big budget deficits. I mean, as a Canadian, yesterday the finance minister was up talking about some extraordinary numbers. So we're not anywhere near through this. It seems it's a health pandemic, which I can't really comment on, but it's certainly not as an economic calamity for the planet. And Nigeria is not immune to it. Now, turning to the specific issues, I mean, we have said from the outset of this, early in March, that the number one thing for Nigeria was to make sure that the food supply chain kept working and that we kept getting resources to the bottom of the pyramid so people could eat. We cannot end up in a situation where we have widespread hunger in Nigeria. Now, as we look out a few months, what's really critical is the next planting season. I mean, the rainy season's upon us. We need to get the harvest. I mean, what's causing inflation at the end of the day is if there's too much naira and not enough food in the system. So we need to make sure, the number one thing is to make sure that the food supply chain is working, which means the farmers have the inputs, the farmers are planting, and then when they produce food, the food is getting from the farm to where it's actually processed and where it's actually consumed. That is critical.
Now, let's move on now of the fear about the second wave of COVID-19. Even in the U.S., we've seen many fear that there might even be another lockdown and that won't be good for the economy. What if that happens? What's your reaction to that? And what blow would that have on the global economy? Because that's not going to be good at all if it happens.
Well, I think that what experience over the last month is showing us is we're nowhere near the end of this, right? I mean, countries have tried different strategies. Certainly the United States is a case where people are saying that certain states like Georgia, Texas, Arizona open up too early. Now they've got the number of cases and the number of hospitalizations increasing at a rapid rate, which of course you turn around and have a re-lockdown, which is extremely difficult. I mean, in Melbourne, they're locking down a large area of the city. Very difficult to have gone through this once and now come through it again after you've been opened up. And the world is weary of all of this. So, the net result is, as I said, when you have lockdowns, people don't consume. No one's flying internationally. The tourism industry is destroyed around the world. Restaurant industry, hospitality industry is destroyed. And that all has knock-on effects. I mean, one of the things that of course, we're seeing, say, in different countries, is as much as people would like to continue spending money at the government level, there are limits to it. So in the United States, for example, state and local governments can't run a deficit. Well, the tax revenue has been crushed. So we're about to see a whole series of layoffs of government employees there. And we're not immune to this in Nigeria. I mean, the government, I think, to their credit, federal government is very honest about the economic situation. They put out a budget deficit of about 5 trillion naira. They've said that the flow from oil to the government will decline from 5.5 trillion naira to 1.1 trillion naira. So immense pressure here in Nigeria as well. And I think we have a long way to go. And I think there really needs to be some clear thinking how to navigate through this. But anyone who thinks that we're coming out of the economic crisis caused by COVID-19 in the short term, I think is just being naive. We all hope that's true, but we can't plan on it.
Andrew, we've seen a lot of support. You've also identified that from Nigeria and other countries. We've seen what happened in the US, in the UK, and all of that. We've seen support, stimulus packages, and all of that. But when we look at Nigeria, is there any way we could run away from any form of recession? Or is it going to be a technical recession like we had the other time? Or is it going to be a deep negative growth as we move on?
Well, I think it's inevitable we have a recession. I guess it's a question to what degree. I mean, as I said, I think the federal government has done the best job they can in the circumstances. But if we take a look at the fiscal stimulus, I think the Nigerian fiscal stimulus may be on the order of 1.5% to 2% of GDP, whereas the stimulus in developed countries like Germany, United Kingdom, US, Canada is on the order of 15 to 25% of GDP. So we just don't have the firepower in Nigeria to create that kind of stimulus, in fact. So we're in a very difficult position. I think that one interesting thing that we put forward was, if you think about our need for dollars, so we've had a collapse in the oil price, which means the flow of U.S. dollars to the CBN and the federal government and the state governments, well, they don't get it in dollars, they get it in naira, but it has really collapsed. So what are the sources of foreign currency to support the economy? I mean, we put out our report, another report last year that just talked about the biggest source of FX is actually the diaspora. And of course, you referenced this morning, the Nigerian Bureau of Statistics has come out and made the same point. 6% of Nigerians receive remittances from the diaspora. And of course, those 6% all have families. So when you think of what supports Nigeria through this, we also said very early on, very critical to maintain ties to the diaspora, because of course they're under pressure in their own country, but at least in the country they live in, but at least in those countries like in Canada, like in the UK, they're getting income support. And we need to make sure Nigerians who are connected to their relatives and friends in diaspora, it's very important that we do our best to maintain that flow of diaspora remittances. I think the World Bank estimated we'd see a decline of about 10% in remittances. I mean, that I think would be a good outcome. But in terms of a recession, I mean, we don't even put out an economic forecast on this. No one knows. I mean, lots of people put out numbers. Many of them have been wrong. They continue to get worse and worse. We've put out a guess of -5 to -10% shrinkage in the Nigerian economy this year in GDP terms. Not much different as the numbers that effectively IMF and World Bank are coming to, even the federal government. So I think we can expect, a big contraction. And to put this in context for the watchers today who are on the show, In 2016, we had a very difficult recession, but the economy shrank 1.6%. Of course, we have population growth of maybe close to 3%. So per capita in 2016, income per capita in Nigeria declined maybe 4.5%. If we have a situation where we say have a 5% contraction in GDP, so 3 times the contraction of 2016, we still have 3% growth, which means income per capita is declining 8%. And of course, we understand the impact on unemployment. We understand the horrible impact on the number of people in absolute poverty, where we in Nigeria continue to lead the world. So there's no easy answer to this on that. Well, we just need to manage the best through this, focus particularly on the bottom of the pyramid, the palliative measures, making sure the bottom of the pyramid is getting access to enough to eat. But there is no quick fix to the economic damage from COVID-19.
No quick fix. Andrew, I'd like to touch on what the central bank has been doing. We know how much they've been trying to defend the Naira before now, and we've talked about the sustainability of this process. Now we are looking at the issue of partial devaluation, if we're allowed, because the central bank doesn't want that word devaluation. They're saying it's like trying to regulate, letting the dollar and the Naira be appropriately priced. Now, what's your take with regards of this shift, and what effect do you see that having on the Nigerian currency?
Well, we've been among the groups that have advocated over the last number of years that there should be a unified exchange rate, and the basic reason for that is it's just the current regime is prone to things like round tripping and abuse, and also so confusing to investors both within and outside Nigeria. We don't get sufficient investment. So that's been our basic approach. I mean, the central bank, of course, has tried its best to manage the currency situation, but the ability to manage the exchange rate only comes from having dollars, because if you don't have dollars, you can't control the exchange rate. So with the collapse of the oil price, the flow of dollars to the CBN has been massively reduced. So of course they're going to not be in the same position to keep the exchange rate. So for example, I mean, we effectively had the official rate at 305 for a number of years, and the parallel rate was also managed by the central bank because it had sufficient dollars at 360. And that's no longer possible. So we've had whether you call it, a market adjustment. I mean, we moved to 360 for the official rate, and effectively now 380. So there has been, again, I'm not going to use the word devaluation. There's been an adjustment, and I think, of course, both the central bank and the Minister of Finance have come out in the last week or so and said we're moving to a unified exchange rate. I guess we would characterize this as essentially forced. As I said, if you don't have the dollars, you can't control them. Now, what's interesting about the exchange rate, of course, as I said, the largest flow of dollars is, again, from the diaspora. So it's critical if we want to have a stronger Naira that the diaspora continues to support Nigeria. There are things that we cannot produce in the short term that are going to have to be imported. But I mean, there's now a commitment to a unified exchange rate. I think the Minister of Finance gave a timetable of about 1 year. So that's where we're headed. But it's been a process over a number of years. But it's really accelerated by the COVID-19 crisis and the crash in oil because, as I said, the CBN can no longer control this. So in a sense, it's out of their hands. And the term that we've been using is a forced restructuring. So we've seen this in a few areas. The government's very clear now. There was another statement by the federal government that we were clearly deregulating the foil price, the PMS price. It fits the starts over the last few months. This has sort of come out. The government's actually even come out and talked about the Orange Say report of 2013, restructuring the MDAs, simplifying, reducing the cost of governments. Of course, the vice president came out, I think last week, and made a very clear statement that the cost of governance was too high. All of these changes, along with the exchange rate issue, are being, in a sense, forced on the government. So issues that have been discussed for a number of years, in a sense, the government doesn't have any choice at this point, and we're going to have to see major changes. So we're seeing in the PMS market, we're likely to see them with the MDAs, where the president assented to the RSA report. We're likely to see it again in the currency market on that. So if we had to give some positive news, I think there is a economic restructuring of the Nigerian economy going on. Not at the pace the federal government wanted because it's been forced by COVID-19, but it's happening quite quickly right now in Nigeria. And hopefully it'll lead us to a place in 2021, 2022, where we do see kind of inclusive growth. We see a lot of states stepping forward for their own economic development, developing their own strategies. We see the diversification that we all wanted. I mean, in your earlier reports, there was very heartening news that the NNPC is sending more gas to power, which is critical for the nation. So I think there are actually, despite all the bad news I just reeled off, I think in the medium term, there's a lot of potential for a lot of good to come out of it. I mean, one of the interesting things in the exchange rate, of course, is that the states are getting more naira. So we said when the naira was 305 officially and 360 on the parallel rate, we constantly asked the question, why this is a problem for the states, because their dollars from the oil flow are being converted at 305 and then they're short naira. Of course, now that they're being converted at 380, they're getting, at least per dollar, they're getting more naira, which is a good thing. So I think there is the potential for, to come out with a much stronger economy. But the next 6, 12, 18 months are going to be very difficult for everyone in Nigeria.
It's really nice talking to you today. Partner and Chief Economist with Pricewaterhouse Coopers Nigeria, Dr. Andrew Nevin. Thank you very much for your time joining us live from Toronto in Canada.